Fixed deposits are India's favorite investment. My parents have an FD. My friends' parents have one. My neighbors have one. Their neighbors have one. You know, when I got my first FD, I was 6 months old. And honestly, that's not surprising. India currently has over 103 trillion rupees saved in FDs. That's how much we love the word guaranteed returns. Everyone knows about traditional bank FDs, the ones that are offered by big banks like HDFC, ICICI. But did you know that some companies and NBFCs also offer FDs that can give you higher returns? They're often called corporate FDs or high-yield FDs. So let's understand what these FDs are and how they differ from traditional bank FDs. A corporate FD is when you lend money to a company or an NBFC, and in return they pay you a fixed interest. Sounds similar to your regular bank FD, right? But here's where things start to differ. Large banks issue bank FDs. Companies and NBFCs issue corporate FDs. So your risk depends on who you're lending to. That's why it's important to check the company's credit rating before investing. Returns. This is where things get interesting. A traditional bank FD will give you anywhere between 6 to 7% returns, which is not enough to beat the inflation rate. And it's almost like making a loss on your investment. Whereas corporate FDs or high-yield FDs usually offer higher interest rates than your traditional bank FDs. Like this FD available on Grip Invest, which gives you 8.4% interest. Bank FDs protect your money up to 5 lakh rupees. Any amount above that isn't insured. With high-yield FDs, this protection depends on the company. Some offer insurance or safeguards, others don't. The high-yield FD we just saw on Grip Invest also insures your money up to 5 lakh rupees. Let's talk about liquidity. Traditional bank FDs are easier to break, though with a small penalty. Some high-yield FDs allow you to withdraw anytime, while others may have a lock-in period. Again, it depends on the issuer. The truth is, our parents didn't have access to these newer, high-yield options, but we do. So maybe it's time to rethink India's favorite investment and explore newer, smarter ways to grow our wealth. Follow Fixed Returns Academy for more insights and investing secrets. Investments in debt securities, municipal debt securities, securitized debt instruments, mutual funds are subject to risks, including delay and/or default in payment. Read all the offer-related documents carefully.